Hello and welcome back to the channel. Today we're diving deep into a topic that affects every single one of us, the current state of the global economy. We'll unpack what's happening, why it matters, and then turn our attention to two classic indicators, the price of gold and the future of the US dollar. Stick around, because understanding these trends is key to navigating the financial landscape ahead. First, let's get a lay of the land. The world economy is in a fascinating, if somewhat turbulent phase. On one hand, we're seeing incredible innovation in areas like artificial intelligence and green energy, which are creating new industries and opportunities. On the other hand, many nations are still grappling with the aftershocks of the pandemic, supply chain disruptions, and persistent inflation. Inflation has been the big story for a while now. Central banks around the world, like the US Federal Reserve, have been raising interest rates to cool things down. Think of it like tapping the brakes on a car that's going a bit too fast. The goal is to make borrowing money more expensive, which slows down spending and, in theory, brings prices back under control. But this is a delicate balancing act. If they brake too hard, they risk stalling the economic engine and triggering a recession. We are also seeing a major geopolitical realignment. Tensions and trade disputes have led many countries and companies to rethink their global supply chains. There's a growing trend towards friendshoring, trading primarily with allied nations, and bringing manufacturing back home. This shift is reshaping global trade flows that have been in place for decades, creating both new challenges and new regional powerhouses. It's a complex puzzle, and every piece that moves affects the entire board. Another key factor is the sheer amount of debt in the system, both public and private. Governments took on massive debt to support their economies during the pandemic. Now, with higher interest rates, servicing that debt becomes much more expensive. This can crowd out spending on other essential services like healthcare and infrastructure, putting a strain on national budgets and, by extension, on taxpayers. So with all this uncertainty, inflation, rising rates, geopolitical shifts, and high debt, where do investors and everyday people turn? This brings us to our first major player, gold. For thousands of years, gold has been seen as a safe haven asset. It's the ultimate store of value when trust in traditional currencies or financial systems wavers. Unlike paper money, you can't just print more gold. Its supply is finite, which gives it an intrinsic value. When we see economic instability or rising inflation, investors often flock to gold. Why? Because as the purchasing power of currencies like the dollar decreases due to inflation, gold tends to hold its value, or even increase. It acts as a form of financial insurance. In recent times, we've seen central banks, particularly in emerging economies, significantly increase their gold reserves. This is a powerful signal. They are diversifying away from holding all their reserves in US dollars, seeking the stability that gold offers. Looking ahead, the outlook for gold seems robust. If inflation remains sticky or if a significant economic slowdown occurs, the demand for gold as a safe haven is likely to increase. Furthermore, the ongoing geopolitical tensions and the trend of de-dollarization, which we'll discuss more in a moment, also support a positive case for gold. It's not just an investment, it's a vote of no confidence in the stability of the current system. Many analysts believe that gold prices have the potential to climb higher as these global uncertainties continue to unfold. Now let's talk about the other side of the coin, the US dollar. For over 70 years, the dollar has been the world's primary reserve currency. This means it's the main currency used in international trade, and most central banks hold a large portion of their reserves in dollar-denominated assets, like US Treasury bonds. This has given the United States an incredible economic advantage, often referred to as the exorbitant privilege. It means there's always a global demand for dollars. However, the dollar's dominance is facing its most significant challenge in decades. Several factors are at play. First, as we mentioned, the high levels of US national debt have raised questions about the long-term health of the American economy and the dollar's value. Second, the use of financial sanctions has prompted some countries like Russia and China to actively seek alternatives to the dollar to conduct trade and reduce their vulnerability. This has accelerated the trend of de-dollarization. We're seeing more bilateral trade agreements where countries agree to trade using their own local currencies, bypassing the dollar entirely. The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively exploring the creation of a new reserve currency for their bloc. While this won't happen overnight, the momentum is undeniable. The global financial system is slowly but surely becoming more multipolar. So, what does this mean for the future of the dollar? It's unlikely to be replaced as the top dog anytime soon. The infrastructure and trust built around the dollar are immense. There's no single currency ready to take its place just yet. However, we can expect its relative share of global trade and reserves to gradually decline. Instead of a world with one dominant currency, we are moving towards a world with several major currency blocks: the dollar, the euro, and perhaps a yuan-led bloc. For those of us living in a dollar-based economy, a gradual decline in its global dominance could mean a few things. It might lead to slightly higher inflation over the long term and potentially higher borrowing costs for the US government. The purchasing power of the dollar on the world stage might not be as strong as it once was. So, to bring it all together, we are in an era of profound economic transition. The fight against inflation, shifting geopolitical alliances, and the mountain of global debt are creating a landscape of uncertainty. In this environment, hard assets like gold are reasserting their traditional role as a store of value and a hedge against instability. We are likely to see continued strength in the gold market as both individual investors and central banks seek safety. Simultaneously, the unipolar world of the US dollar is giving way to a more multipolar financial system. While the dollar will remain a crucial currency, its absolute dominance is being challenged. This de-dollarization trend is a slow-moving, long-term shift, but its implications will be felt across the globe for years to come. Understanding these two powerful and often opposing forces, the rise of gold and the changing role of the dollar, is essential for making informed financial decisions. It's not about predicting the future with a crystal ball, but about understanding the major currents shaping our world so you can navigate them wisely. Thank you so much for joining me for this deep dive today. I hope you found this analysis helpful and thought-provoking. What are your thoughts on the future of gold and the dollar? Let me know in the comments below. And if you enjoyed this video, please give it a thumbs up, subscribe to the channel, and hit that notification bell so you don't miss our next analysis. See you in the next video.